Good morning, Oracles. I love you guys. And you know why? You guys do your own due diligence, you do your own research, and you hold me accountable to certain things. And so over the weekend I had made a video, we discussed some of the gaps that were out there, and Abhishek and Jaime had pointed out that there is a gap that was created last Friday that goes down to 707. So I don't know if maybe when I looked at the charts I hadn't updated yet, whatever it was, I missed it. And you two guys pointed it out, so thank you so much for that. And now while that gap is a lower gap, it is still higher than previous gaps that we had made, which is a great sign. And Slim had actually pointed out that there is a gap that goes back to June 3rd of 2021 that goes down to 572. So these are the gaps that are now open, so these are the ones that I had missed when I mentioned it over the weekend. So will we fill them? Who knows? Again, the gaps filled 9 out of 10 times, but seeing as the trends that we're in right now, I have a feeling that the 707 is most likely going to get filled. And so right now we are on a trend reversal. We had been trending downward for a very long time, and then last week we turned it around and 4 out of 5 days were green. We're now on a small uptrend. But we have seen this before as well, where it started trending up and then it ended up bouncing back down again in what we call a dead cat bounce. And so looking at the way we reversed it this time versus previous times, this time is starting to look more like it was back in March when the Fed started raising rates, where then we went on a 2-week tear and just exploded from there. Of course, from there we did end up falling back down, but this could be an opportunity for us to be able to maybe sell out of some of the stocks that we want to get out of, free up cash, and enjoy the ride a little bit on Tesla. But I do think it is going to come down, fill that 707 gap. So for me, the key points are going to be the CPI data that we get on June 10th, and then I think the FOMC meeting on the 15th, because they're so close, we'll probably end up getting priced in anyway, just because when we get the news from the CPI on the 10th, the market's going to recognize and see what the Fed is going to do and price it all in. So I have a feeling that's what's going to happen. So seeing as the trend we're on now, we are on an uptrend, and if we get good CPI data, we might continue this trend. If we do not get good CPI data, then we might see a reversal and come back down again. So these are the two different scenarios that I'm seeing. I do not see a flat scenario. I think we're either going to go up or come down based upon the data we get next week. And now when it comes to Tesla in particular, we should be getting the proxy out around the same time. So we should be anticipating the proxy within the first 2 weeks of June, and then we're also going to get the CPI and we are going to get the FOMC meeting. So if all three of these things end up being bullish, we could see a very good run for Tesla. If we get, good news coming out of the proxy and maybe bad CPI data, we might balance, but macro this year has been heavier, so we might see a pullback in the stock. Again, lots of different information to absorb and digest, but these are just the small things that I'm paying attention to over the next 2 weeks. And I was going back and looking at some numbers for production, and it does look like Berlin and Austin are ramping significantly slower than I had thought. I don't have any specific details, but everybody else who's putting forecasts out there are showing much smaller numbers than what I have. So I'm going to be taking a look at my production numbers, perhaps adjusting them down a little bit, because currently I have them at 291,000 for Q2. But that is with Berlin and Austin ramping a lot higher than people like Troy Tesla have out there. Now, looking at these numbers, part of me is wondering if they purposely slowed the ramp for this, just because the faster you ramp, the more it's going to cost you. And factory ramps, initial ramps, usually are very expensive. A lot of unexpected expenses that come up. So, Tesla knows what it's like when they did that with Shanghai. So now they're ramping 2 factories simultaneously. So I'm wondering if they purposely kept the ramp slow because they, knew and anticipated there were going to be supply chain issues, higher expenses, and they do have enough money and different things squirreled away in their back pocket to offset some of the margins for Q2, but that's probably if they were ramping at a slower pace. So part of me wonders if this initial ramp is done intentionally, maybe to work some of the kinks out to keep costs down, so that when they do get into Q3 and Q4, they'll have a lot of these bugs worked out and it won't be as expensive to speed up the ramp as it did with Shanghai. Maybe it's a learning experience that they had. And maybe it worked out well for them in this case, with Shanghai being shut down for a month. That's a lot of high margin vehicles that were not being produced. Because when you have a factory that's at ramp like Shanghai is, those vehicles are much more efficient to make and expenses are significantly lower because you've already worked out all of these kinks. So I wonder if these two are going hand in hand right now, which are going to lend a hand to good Q2 numbers when it comes to margins and profits. So again, a lot of people, especially analysts in the market, don't have high expectations for Q2 because they understand it was a one-off situation in Shanghai. So a lot of it's getting priced in, but again, this is going forward. Tesla historically, and Rob Maurer over at Tesla Daily put out a great video explaining, Tesla's trading patterns and how the first half of the year, they don't do as well as the second half. And the second half of the year is significantly better gains than the first half of the year. So this year, we obviously have not had a very good first half of the year. So perhaps we are spooling up for a very good second half of the year as we have had historically. So if Q2 numbers don't come in all that great, it might be okay because Q3 and Q4 historically have been outstanding, and that could ramp us up into the end of the year for the stock price. And now another thing I had thought of in looking at the gas prices as I was traveling back from New Hampshire and realized that I was paying almost $5 per gallon over here in Connecticut, which is significantly higher than the $4.67 I was paying last week. So gas prices are still skyrocketing. Over in California, we've seen pictures of gas prices over $8 in some area and average prices over $6 per gallon. This is absolutely insane. But let's take a look at California. Gas prices are super high, but EV adoption is also super high. So I almost wonder if this is, I don't know how deep it goes. So I don't know if it's the left's way of using like reverse psychology on people and saying, hey, look, gas prices are super high. This is their way of driving up EV adoption. I don't know. Some people can say that the administration is stupid. Others can say they're brilliant. I'm in the middle. I'm just an observer on the outside, but just taking a look at it from the outside, I see that the states like California that have super high gas prices also have higher EV adoption rates. I haven't actually had a chance to dive in state by state. If any of you guys have, please let me know in the comments what the correlation is between higher gas prices and EV adoption. That would be very interesting because if we're seeing that nationwide and the gas prices are going up, then that could mean that the nation obviously is enhancing its EV adoption rate. We have already seen the EV adoption rate going up faster than most people anticipated, which is then in turn going to help Tesla in the future. The more people who want EVs, the better. Sure, it's going to help competition as well, but the more people who want EVs, the more people are going to come and get them, and whoever is producing the most, which at the current time is Tesla, are going to win the most. So Tesla has set themselves up to be able to take advantage of this EV adoption swing that is taking place. Of course, most of us at the lower end of the food chain are suffering because these gas prices are astronomical, and we can't just go and say, oh, well, I'm just going to go buy an EV now, because EVs are hard to come by. So personally, I think that there is a better way to be handling this when it comes to the gas prices and trying to encourage more EV adoption than making the lower end of the food chain suffer like we are. But that's what's happening right now. And I think this in turn is going to help Tesla in the medium term and the long term when it comes to EV adoption and growing the company, because the more people who want EVs, the more EVs are going to be out there, the less ICE vehicles are going to get produced, and the faster we're going to swing over to EVs. And then when it comes to the costs of the vehicles being produced, Goldman Sachs put out a letter stating that they're looking at a lot of the metals that are used in the vehicles, and the price is coming down over the next 2 years. So taking a look at where demand is right now for Tesla, where their production rate is going, thinking about what we've been talking about between 2024 and 2025 and being very key and pivotal years for the company, if the price of all these metals is going to come down, that means that the cost of all their vehicles is going to come down. That means that producing a compact car makes a lot more sense in 2 years. And then we go back to my prediction of a compact car coming at the same time as the robotaxi in 2024. Well, if the cost of the vehicles is going to be a lot lower, then they can actually get decent margins on a compact car. So another little piece of information that is pointing a finger in the direction that we are going to a potential compact car in 2024 and amazing margins coming in the future, because all of their vehicles are going to cost less to make, which in turn means that the price of the vehicles can come down. And then you start to see that reversal where EVs are now less expensive on average than ICE vehicles. So more and more people will be adopting EVs as well in the future because of this, which just means that the EV adoption rate is going to speed up faster than a lot of people think. And so in the near term, when it comes to the stock price, I think we're still going to be seeing this roller coaster ride. I'm going to be paying attention to the CPI data in the next month to see if we come down and make a new lower low, which again, based upon the gaps that we have, the gaps now are higher than they were before, which is a very bullish sign. So we're still going in that good direction. Perhaps 620 was the bottom. I don't know. Chicken Genius had mentioned that he anticipates a big recession or potential crash coming due to oil prices skyrocketing right now. Now, he also predicted that we would hit a double bottom in May, and we did. So again, he always says, take his insights with a grain of salt. You know, he's not always right, but in this case, he had been right. So it's something that's on my radar as far as if we are going to see a housing crash coming later. Are we going to see a bigger recession coming later with oil prices going so high? You know, looking at oil prices right now, this could be, again, as we said, the swan song, their last big push before we make this big transition over to EVs and oil starts to fade to the wayside. So maybe this is their going away celebration and they're skyrocketing now and the market's going to suffer because of it. Again, I don't know, but again, that gap down to 707 and the other gap potentially down to 572 might be two levels that we hit depending on other data that we get. But still, when it comes to Tesla alone, you know, we've got those two gaps, but we've got the proxy coming out, we've got the master plan part 3 coming out, we've got Q2 production and delivery numbers coming out in early July, Q2 numbers that should be very good coming out at the end of July. Then we've got AI Day 2 and the annual meeting and a split. Lots and lots of very positive stuff going on for Tesla. So even if the macro environment still does keep it weighed down in the near term, long term we are going to be looking extremely outstanding for the stock. And with the gap up that we have to 865, I think we might end up filling that 865 gap before CPI data comes out, and then we might see the tail off after that. Just following charts and seeing things where I'm going. But let me know in the comments below, where do you think we're going to be trading in the near term, for those of you who do follow it near term. And then long term, do you think that this is going to bode well for the company when it comes to 24 and 25, when we have a potential pullback in prices on metals and oil prices coming back down, and then EV adoption really taking over? Where do you think we're going to go from there? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.